some big names in the markets are starting to bet on inflation. We had the Black Swan author, Nassim Taleb, world-famous guru, announcing that he's launching a new fund simply to bet on inflation. We had John Paulson. He's launching a new fund to focus on gold and other things. Is this smart? Should people, in fact, be going long commodities and short treasuries?
I don't think it would be a bad idea for a portion of your portfolio, but I'd much rather bet with Paulson than Taleb. Nassim Taleb, of course, the author of Black Swan and Fooled by Randomness, I think. He is a great predictor of things, not a great trader. Paulson's
a great trader,
yeah,
yes.
There's no doubt that Paulson's a great trader, but Nassim Taleb, I'm a little suspect. But I think if you, for instance, no more than 10% of my portfolio would I bet on inflation, because I don't see that coming around till late 2010, except in energy.
Okay, so you don't, because last week we got the big spike in yields, and everyone said, okay, here, this is it, boys, hang on, this is the big one. That's premature from what I'm getting the sense from you?
I think so, because, I thought, Aaron, that we should have seen yields significantly higher than they were. I think if deposit accounts, in particular in your securities account, you're only insured to $100,000 in cash in your securities account, $500,000 in securities. So that's under SIPC. I think that was a big push towards the bonds and why the yields came down so dramatically, because, of course, as we buy bonds, we push the yields down. Right. I think we weren't being rewarded for giving our money to the government, and that we should have been getting a better return, but unfortunately there was that problem that these accounts weren't insured. They moved it up on the FDIC, the money you had in the bank, but not in your brokerage firm, so there was this huge rollover of customers buying bonds to get the protection so that they could avert a disaster if one of these securities firms went out, which knocked on one.
That was, of course, late last year, early this year, when people were worried the world was coming to an end.
Yep.
And I think also that general trade has come off, and so people are saying, well, maybe I don't need to stick my money in the Treasury market. It's coming out and going into riskier assets.
Right.
So you're seeing commodities rally and emerging markets rally. Are people misinterpreting that as an inflationary sign? Is it just that there's a little more risk-taking happening now?
I think you're exactly right. They're misinterpreting it. That's risk capital going into the markets, not as much an inflation trade. Emerging markets are up 34%, or give or take, year to date. I don't think that's a mistake. I think that they were unfairly hit, in particular China and India, of course. Brazil will be a little more problematic, but they're making a nice turn here too. So I think all of them, are, as far as emerging markets, are going to do very well and outperform well into 2012.
But just back on inflation, look at oil. It's up more than 100% off the bottom. And it's at a level that 3 years ago people would have freaked out about, that it's so high.
Yep.
Obviously we had this spike in recent memory, so it seems like a bargain still. We're almost $70 a barrel, though, and that's actual inflation.
Yeah, it is. And one of these days, Henry, we're going to listen to T. Boone Pickens again.
That's right,
about his liquefied natural gas. Because, he had that three-part plan, wind, solar, and then liquefied natural gas, or LNG. I think you'll see a lot of cars, and this is, like I say, I believe a positive thing, that if crude oil stays over 60, and right now it's over $67 a barrel, I think you'll see liquefied natural gas making that real stand and becoming an alternative fuel in vehicles the way it wouldn't have if gasoline and oil was down in the 40s.
Right. So before we wrap, that 10% of your portfolio in inflation, how would you position it? Would it be in gold? Would it be in the miners?
It would be in gold and TIPS, those Treasury Inflation Protected Securities. That's where I would go, those in particular. I don't think you need John Paulson to do that for you. I think he'll do very well, but I certainly, like I say, would stay away from Nassim Taleb, except to read his books.
John, thanks very much.
Thank you.